BQ Prime. Hi, this is Nickey. It's been a turnaround year for HCC, clearly. When you talk about the net profitability of the company has reported profits of nearly 420 crore in this financial year as compared to a loss of more than 600 crore that we've seen in the previous financial year. In terms of the top line performance, that too has registered an uptick of nearly 30% year-on-year basis. But how does the outlook stack up going forward? Let's understand from the Vice Chairman and the whole-time Director of the company, Mr. Arjun Dhawan. Hello and welcome to BQ Prime. I'm going to start off by asking you about the turnaround story and how sustainable are these profits going forward?
We're very confident that we will continue to maintain this momentum. The HCC parent engineering construction business has registered its annual turnover, which has probably been it is actually the company's highest turnover for the year historically. We are at the cusp of completing our reorganization of our debt with our lenders, which will add to the order backlog of the company in this coming year and continue to basically help see momentum, both basically in terms of top line and the bottom line. The business has also been supported very nicely by our subsidiary businesses, which have actually put COVID squarely behind us. We've actually had monetization of non-core assets. We've actually settled some of our various matters with our clients, actually putting liquidity on our balance sheet. And so as a result of basically this year, we both have a strong operational performance and we have a stronger balance sheet to show for it as well.
Sure. Let's talk about your order book size for the financial year and what is the kind of growth that we can expect going forward, and also a word on your execution rates.
So the order backlog has unfortunately remained flat for the last 2 or 3 years, and that's a function of the fact that we've been completing a plan with our lenders, which will now allow for substantial amount of freeing up of our limits to be used for the growth of our business in the upcoming couple of years. We're looking at a modest increase, I imagine, of at least 25% on an annual basis for the next few years. The sustainability of this is very clear because we had some hiccup during COVID. We have had obviously the impact of higher commodity prices, impact some of our costs. But as far as HCC's difficulties that it's had with regard to some of the challenges, we've squarely put those behind us, and we've actually had, as a result of a substantial amount of our asset sales and return of capital, a liquidity position that's much, much stronger.
Sure. I'd also want to talk about your outstanding claims at this point of time. How much of that has been carved out to Claimco, and also what's the kind of debt position and the claim does Claimco as a company holds? So a word on that.
So the reorganization of the debt of HCC will now have approximately 3,000 crores of our debt now moved to the SPV, along with nearly about 7,000 crores of our assets in the form of awards and claims, which is an adequate asset cover. And that will actually, because of the substantial pendency that exists in court, give adequate time for those claims to actually be received and recovered. In fact, there's about 3,000 crores of arbitration awards that are unfortunately stuck in courts for now a number of years. And the asset liability mismatch that HCC has actually seen, I mean, our net asset value is considerably positive. We have the complete support of our lenders, and they appreciate the fact that these government receivables, because that's HCC's business, takes years to actually see their way through the court system. Unfortunately, the reality is that most of the arbitration awards, which are final and binding, tend to get mechanically challenged in court as decisions, swift decisions to actually pay don't get taken. And sometimes, in at least in many cases, it ends up becoming a strategy to actually end up delaying the payment. Now, for us, it's highly certain form of payment that is just a matter of basically delay. And the company has actually now reorganized its debt so that the SPV will have the adequate asset cover to end up basically addressing this portion of the debt. As a result of this reorganization, HCC and remaining debt in HCC, which is going to be about 3,000 crores, will entirely be managed through the assets of the business, as well as basically the operational cash flows of the company.
Sure. Also, I wanted to talk about how the arbitration proceedings overall have been panning out. What's the progress out there? And I'd just like to combine this question with the fact that how much mix of your orders have less than 0% margins due to JDA? How much do they stand at right now? How much do you expect them to grow?
I'm sorry. Could you repeat that? Because of JDA?
Sure. I was just talking about the mix of orders which have less than 0% margins due to JDA, and how much do they stand?
I don't know what you mean by JDA.
Okay, that's just a mix of what I'm talking in terms of just for the visibility presence in terms of certain contracts that you have in terms of order book. How much do that?
But when you say JDA, I'm talking about the acronym. You mean joint development, or yes. Is that understood? Yes. Okay.
Yes.
So JV agreements versus. So about a little over 30% of our order backlog is in joint ventures, or is basically through a project management contract. Those jobs. So none of our jobs basically that we take on are with a negative margin. We do have in some of the cases where projects are delayed, you actually have a working capital impact. And obviously, I think in any company, you will always have a mix of order backlog where you will have substantially positive projects, and some projects inevitably will actually perhaps be somewhat negative. So the project mix is something that is something that we're comfortable with. Certainly, we are looking to actually improve that mix considerably in the future by not actually relying as much on joint ventures, but actually now that our capital will free up, we will be looking to actually take on new jobs ourselves. That's the answer to your first question. The second, I think, with regard to what the views are on the arbitration process in the country, I think the government and the cabinet has made substantial strides in actually improving dispute resolution in the country. The amendment to the last Arbitration Conciliation Act has required for arbitrations to be time-bound. And so we now have a process that is conclusive within 12 to 18 months. The unfortunate reality is that while the government and the CCA themselves actually required and are encouraging settlement of issues on a real-time basis, and the avoidance of mechanical challenging of arbitration awards, unfortunately, these seem to actually continuously get challenged. And once they get into the court, international best practice would require for an addressal within a matter of months. In India, unfortunately, because of the pendency and the lack of infrastructure, sometimes it takes years and years and years. That obviously has consequences on supply chain, on the financing of projects, making infrastructure financing much more expensive, so on and so forth. For us, some of these issues of the past are now being addressed as part of the reorganization that we're executing. And we're very, very clear that going forward, that we will actually have our business executed in a way to minimize the impact of that. Now, obviously, execution of infrastructure projects can't completely avoid delays. I mean, most infrastructure projects are delayed. But the government has been far, far more responsible now about bringing infrastructure projects to market, in a far, far more organized fashion. In terms of the quality of the DPRs, land acquisition being completed, having the clearances in place. Because the worst thing you can do is actually having an ill-planned project actually tendered out, which then basically ends up getting stuck.
You also spoke about your non-core assets divestment, right? I mean, how is your Swiss subsidiary? What's the status there? Is the company planning to ramp up the profitability of the division, or it's considering a hive off there? What are the pipeline of the divestment looking like for this financial year?
So HCC as a business is construction, and the parent business is in the heavy civil space. Our Swiss subsidiary Steiner is very, very high quality building construction. And if you look at most construction companies, building construction happens to be a very core part of the larger construction solution that infrastructure companies provide. The return of capital, which is obviously extremely important in any business where capital has been invested in subsidiaries, has actually been substantially achieved. For example, in our concessions business, there was about 800 crores of equity that was invested. We've actually had a return of capital of more than that. We're actually working on currently having substantially more money returned as a function of the 7,000 crores of assets that we developed in our BOT business have now fully been developed. The life cycle has been achieved. We've actually entered into multiple agreements in this past few years to monetize those assets, the most recently being with Cube for our last BOT asset, Behrampur Farakka. As far as our business in Steiner is concerned, it is a material subsidiary of the company, accounts for nearly about 60% at this point in time of our group turnover. COVID actually correlated the world in terms of the hiccups that we've felt in the business cycle for all our businesses. Certainly, as our Swiss subsidiary continues to grow, and now it's if you note the profits that the business has generated this year have been very strong. We certainly expect for that business to through its dividends and through basically return of capital, really basically support the bottom line of HCC.
All right, Mr. Dhawan, we'll leave it at that. Thank you so much for taking out the time and speaking to BQ Prime.
It's a pleasure, Nickey. Thank you.